we want to bring in a regular guest who's got something special going on today. This is Jeremy the Eagle Siegel, Professor Emeritus of Finance at University of Pennsylvania's Wharton School of Business, Chief Economist at Wisdom Tree. Congratulations, Jeremy. A huge win for the Eagles, and man, was that decisive.
Absolutely. I think the MVP should be given to the defense. I don't want to take away from Jalen Hurts. He did great, but wow, what a smackdown.
Unbelievable.
There was nothing that Mahomes could do, and to see him flustered like that, that is...
I've never seen that before.
Me neither. Me neither. That was something. Anyway, congratulations, and I get it. The hat, I'd probably wear that all year myself. Professor Siegel, let's try and figure out what's happening in the markets. We spoke earlier this morning, and Joe made this point that he's feeling unsettled by all this, not knowing, feeling a little rudderless, I think was the term you used, Joe, and I think that's fair. There's so many things that we're waiting to see, not knowing exactly how things are going to play out with policy from Washington, with tariffs potentially. How do you look at all of this and try and figure out what to do with the stock market?
Yeah. And I think the CPI in an hour is going to be one of the least impactful that we've had over the last 12 months. First of all, I don't think it's going to be a great one. There's seasonal biases that push up the January, so I think it's going to be at or maybe one tick above. Secondly, we have a whole new monthly cycle of data before the FOMC meeting on March 19th. So, it's always the latest one next month that tends to count. And truthfully, I think that the market is now, more concerned about tariffs than the CPI. I mean, they're sort of reconciled to, hey, maybe one cut, maybe not. I mean, that whole thing about 4 cuts is down. I know Citibank has called for that, but I think you're only going to get 4 or 5 cuts, 6 cuts if you're going to get some really weak economic news, and I don't see that. A second thing, of course, that's coming up is, again, the shutdown of the government. Trump has to get all the Republicans on board. The Dems are all going to vote against it. So, he has to line all those up. So I think, that's factor one. But I think, the question of whether the tariffs are going to be reimposed and at what level and what kind of level of retaliation, I would put that as number one, and I'd put the question of getting everyone in line. I think there'll be another continuing resolution because until they get the omnibus bill put up and passed, but they need to fight for that. And then, of course, looking at that data, but again, we have 6 weeks until the meeting.
So if you're looking at positive factors, I guess it's still DOGE and the regulatory changes that have been brought by it. How much of that has already been factored in?
I think DOGE is exciting. I mean, actually, I think I think the market is looking very positively, and surprisingly, how much they think could be done under Musk. I mean, look what he did to Tesla. I mean, he had saved costs that virtually no expert thought was possible, and they gave him that mega pay package that they never thought they'd have to pay, and he made it. So he would be the man to do it, and I think there's excitement about that. But then again, I mean, how much you're going to save, and what is that? Trump wants to take taxes off of Social Security, off of tips. He talked about making the SALT deductions again full. I mean, that's trillions of dollars. So you need to come through on some other side to get that passed. That's going to be a tough nut to crack. But I think, those are the things swirling around. How do we position politically? We got to get the continuing resolution. Then we get an omnibus bill that includes border security, immigration, and the tax cut extension, plus some other tax cuts. I think the 2017 tax cuts by themselves is easy to get through. I think everything else is going to be harder, and that's where the fight is going to be.
So, Jeremy, we had someone say 125 basis point cuts. I don't know about that, but are you counting on any multiple expansion? And if not, we're not cheap, and that might not be a reason to stay out of the market that we're not cheap. But what do you say? Are we at 22 times earnings? What would you say? 22?
Yeah, we're at 20. We're 22.
So anything we get, any advance we get, is going to be from earnings growing. Is there a reason to think that the environment we're in would allow companies to grow at 10 or 15% this year?
Yeah. Well, we have these two markets. We have the Mag 7, which is Tesla is selling for 30, 35. And then we have the other 493 stocks that are selling more towards 19, which is, to me, very reasonable. I've often talking about 20 as an equilibrium PE. So really, it depends on what happens to that section. We had DeepSeek. We had that BYD announcement putting pressure, I think, on Tesla. Is that sector going to be the leader in the next bull market? So the question is, overall, people say 22, but we really have these two markets, and whether Mag 7 can continue the momentum that it's had over the last 5 years, 10 years, or whether we see the cracks beginning to form in some of the narratives on the Mag 7.
You wouldn't necessarily advocate putting any money to work right now? You want to wait and see the data, too?
I would be cautious on the Mag 7. I like the other groups. I mean, at 19, I like them. And we've talked about a long time, and certainly they've lagged. You go to mid cap and you go to small cap and you go to 15, 14, 13. You don't need much growth to get a decent return on that. But as long as the Mag 7 continue 15, 18, they'll be the leaders. The question is, now we see this competition could bring down margin. Will they be the leaders in the next 12 months? I'd love to be able to give you an answer on that, but I think we just have to wait and see on the data.